Right now, if you scroll social media, you'd honestly think crypto is finished. Everywhere that you look right now, they are screaming multi-year bear market. The cycle is over. Bitcoin has topped and altcoins are dead forever. Fear is absolutely everywhere. And let's be honest, fear gets clicks. Negativity gets engagement. And some content creators are leaning very hard into that right now. But here's the thing most people don't want to hear. When sentiment feels this bad, historically, that's not when the markets are ending. That's when they're transitioning. And today I want to zoom out with you, not emotionally, not reactively, but rationally. Because when you stop listening to TikTok doom and start looking at what industry research, institutions, and on-chain data are actually saying, you get a completely different story. And that story is not a multi-year cycle collapse. In fact, a growing amount of research is now pointing towards a 2026 that might just surprise a few.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
We've seen this pattern before. In fact, we've seen it in every single cycle. Price goes sideways or chops lower. Retail gets bored, engagement drops, and creators turn negative because fear outperforms balance when it comes to their content and the amount of views that they will get. And suddenly, everybody mistakes price boredom for market failure. But markets don't move based on vibes. They move based on liquidity, supply, and positioning. This phase always feels the same, frustrating, emotionally draining, like nothing has ever happened like this before. But right before something does. Let's talk about the ZY Crypto article linked below this video. It says why Binance Bitcoin reserves keep falling and why it's actually bullish. At first glance, that headline scares people. They hear Bitcoin leaving exchanges and assume people are exiting crypto. But that's completely backwards. Falling exchange reserves means less Bitcoin available to sell instantly, more Bitcoin moving into cold storage, more long-term holding behavior, and reduced liquidity supply. Historically, this happens before expansion phases, not during collapses. When investors expect lower prices, they keep coins on exchanges. When they expect higher prices, they remove them and they move them to cold storage. So this data doesn't scream panic, it screams preparation. Another huge mistake people are making is assuming this cycle behaves like 2017 or 2021. It doesn't. This cycle is different. It now includes spot ETFs, widespread. It includes institutional custody, corporate treasury exposure, regulated on ramps, long-term capital, not fast money. Institutions don't trade like TikTok traders. They don't panic sell the boredom. They don't chase the green candles. They position years in advance. Which brings us to what the biggest research desks are saying right now. Let's put this on the screen. This is not a YouTuber guessing. This is Grayscale, one of the largest digital asset managers in the world. They are not in the business of hype. They are in the business of capital allocation and risk modeling. And they're pushing back firmly against the idea of a deep multi-year crypto winter. And why is that? It's got lower insurance post-halving. It's got higher long-term holding dominance. And institutional rails are already built. And it's also got improving regulatory clarity. Markets don't peak when fundamentals strengthen. They peak when speculation is extreme. And right now, speculation is quiet, but the fundamentals are loud. Now let's add a second, completely independent data point. CoinMarketCap Research head Alice Liu projects this. The next major crypto bull cycle kicks off in Q1 2026. Again, this matters. CoinMarketCap isn't emotional. They analyze capital flows, volume behavior, network growth, and liquidity cycles. And what they're seeing does not align with the multi-year collapse narrative, not even close. It aligns with a compressed cycle where price frustrations happen before expansion, not after it. So why 2026 specifically? Let's break this down calmly, without any TikTok drama. The first is liquidity cycles. Markets don't wait for the official rate cuts, they move ahead of them. Liquidity expands quietly, then price reacts later. The second is Bitcoin supply dynamics. Post-halving years historically bring reduced sell pressure, scarcity effects, and stronger demand reactions. The third is institutional timelines. Institutions don't rush, they allocate slowly, methodically, and early. And the fourth is retail psychology, and this one is a big one. Retail fear usually peaks before expansion, not at the end. And for me, that is exactly what we're seeing right now. Because go and look at the comments across social media. People are terrified. And that is exactly where we are right now. Let me be very clear. There will be volatility. There will be pullbacks. There will be moments that feel awful. But calling this a multi-year bear market ignores exchange supply trends, institutional research, liquidity cycles, and on-chain positioning. But remember this. Fear-based content performs very, very well in this environment. And that's why some content creators are churning it out on a daily basis, because they're addicted to views. Accuracy takes longer, and that's okay. That's why I'm here. The people that win in these markets don't react emotionally. They stay structured. Smart money isn't shouting on Twitter. They're accumulating quietly, reducing liquid exposure, thinking in months, if not years in advance. They're preparing, not predicting. They're understanding something retail often forgets. Boring markets are where positions are built. I bang on about this in the Crypto Wolfpack every single day. When it's boring, that's good, because that's where we're starting to set our positions before the move even happens. So the real question becomes this: what should you do right now? Or what should I do right now? This is where most people go wrong. They either freeze or overtrade out of boredom. Neither works. What matters in phases like this is process, not prediction. And that is exactly why I created the Crypto Liftoff course. It's completely free. No paywall, no nonsense. I built it to teach how to approach market phases exactly like this. How to buy without chasing prices. How to think in zones and not candles. And how to manage risk so emotions don't get you wrecked. This is the exact framework that I've used through multiple bear markets. I've used it in the sideways markets, and I've used it in multiple bull markets. If you want to be positioned for the next expansion instead of reacting late, then start here. The link is in the description and it is 100% free. And for those of you that are a little bit more advanced, when the markets expand, it's already too late to prepare. That's why I use Blofin. With my link in the description, you will get an enhanced sign-up deposit bonuses and enhanced trading volume bonuses. Basically, free incentives for doing what you already do, trade crypto. The key is the preparation. You don't open accounts when volatility explodes. You set everything up while things are quiet. You should be setting those low leverage trades at 2, 3, and 4x right now. And in fact, some of you I know have already got them set. I've already got mine set, but you're not too late. There's a link in the description so you can go and sign up for Blofin, get all the extra bonuses that you want, and get those trades set. So to wrap this up, crypto doesn't die when sentiment turns negative. That's usually when it resets. Right now, social media is loud. Fear is clickable. Patience feels boring. But when you zoom out and look at it, on-chain data, exchange behavior, institutional research, liquidity cycles, the story behind the scenes looks very different. You don't need hype. You don't need price predictions. You need discipline, structure, and time. And if 2026 really does surprise people, and if 2026 really does surprise some people, it won't be the loudest voices who benefit. It'll be the ones who stayed calm while everybody else lost focus. Thank you for making it all the way to the end of this video. If you have made it this far, then please hit that subscribe button, hit that like button. There's a brand new feature called Hype. It's completely free for you to do. Everybody gets 3 hypes a day to hype a video or a creator that you really like at the moment. And if any of you can see the hype button below the video by where it says subscribe, please press that hype button and give me that boost. I'll appreciate every single one of you that does it. And if you do hit that hype button, let me know in the comments. I normally only make 1 video a day, but today I've done you 2. So if you appreciate that, I appreciate you. I'll be seeing you on the next video. And remember this, the strength of the wolf is in the pack.